Okay, for this video I wanted to cover IRS Form 8863. This is how to claim the education tax credit for the American Opportunity Tax Credit. So the form is used to claim either one of these two, so American Opportunity or Lifetime Learning. In this example I'm going to cover the Aotc rather than the Lifetime Learning because the American Opportunity credit is generally more favorable, it provides greater amounts, and you can claim it on a per student basis rather than just one per taxpayer. Okay, so I've got the form in front of us here. We'll go through this, but I've also got a slide here where I want to cover some of the background on these credits and what are some of the differences between the two, and then we'll look at the fact pattern. So broadly speaking, there's a number of different types of tax credits or incentives that the IRS offers you if you're a U.S. student, right? So the first one is the American Opportunity Tax Credit. That's what we'll cover in this video. And then there's the Lifetime Learning Tax Credit. The third one here, the Tuition and Fees Tax Deduction. This was previously filed on Form 8917. However, this deduction did expire at the end of December 2020. So for the 2021 tax year and going forward, you're no longer able to file this 8917 for the tuition and fees tax deduction unless obviously that changes, right? So Congress could reinstate this if they want to. But for now, all we're working with here on the Form 8863 is the Aotc and then the Lifetime Learning Tax Credit. Okay, so what are some of the highlights on the Aotc and the Lifetime Learning Credits? Well, the American Opportunity Credit covers the first 4 years of post-secondary education. All right, so that means after high school, your first 4 years of college, okay? Whereas the Lifetime Learning Credit can apply to any kind of education all the way through grad school. So it's not limited to your first 4 years of college, okay? Now, the Aotc, once you claim it for the 4 years, then it's done, right? So this really does apply to once you enter undergrad, your freshman, sophomore, junior, senior years. This is where you're going to get this credit. Now, the Aotc is generally preferable because you get a larger credit amount and it's on a per student basis. So what I mean by that is if you're a parent and you have a bunch of kids in college, you can claim the Aotc for every single student, right? So every child will get to be able to claim this credit. Obviously, if you're not being claimed as a dependent by your parents, you can claim this yourself. But the idea is the Aotc is eligible for parents that still claim their kids as dependents up until they're the age 22, right? Versus the Lifetime Learning Credit, it's only claimed on a per taxpayer basis. So if you're filing a 1040, you're only ever going to have one Lifetime Learning Tax Credit on that return if you are leveraging this credit, okay? Now the Aotc is also important here in that the student has to be pursuing a degree, all right? And so what we mean by that is they can't simply be taking classes for either fun or part of a non-degree program. So in contrast, under the Lifetime Learning Credit, the credit can be claimed if you're not pursuing a degree. So if you're working full-time and you just want to take a course to try to enhance your knowledge or slowly move into another profession, but you haven't committed to a full degree program yet, the Lifetime Learning Tax Credit is available to you. The Aotc is not. You have to be enrolled in a program where you're actually pursuing a degree. And at the end of it, you graduate and you get a degree. You can't just be dabbling in various types of courses and things like that. Those expenses are not eligible. Now, the Aotc, the credit is for 2021, it's available up to $2,500 of education expenses. And so the way they calculate this is it's always 100% of the first $2,000 in expenses. And then you get 25% of expenses over $2,000, but it's capped at $500. So in our example here, we have John Doe at the bottom. He's enrolled full-time studying accounting. His expenses for the year were $5,200. That was his tuition. So he's going to get $2,000 minimum, right? That's the first $2,000 of his expenses. And then he gets 25% of everything over $2,000, but it's capped at $500. So in this fact pattern, John is going to get the full $2,500. The idea here is if your total expenses were only, let's say, $2,200, $2,300, you'll get the first $2,000, but then you're only going to get 25% of that excess. So you might not get the full $2,500, but you'll at least get $2,000 plus 25% of that excess over the $2,000 floor. Okay, so let's look at the form itself and walk through the example here. Again, we've got John. He works full-time, goes to school full-time. His expenses for the year were $5,200, and his wages from his job were $32,500. So now if we go look at the forms, we'll see how these elements are filled out and then how the ultimate credit is passed on to John's return. So we started the 8863 here. This is page 1, part 1, but you should be starting on page 2 first, right? So as it says up here, caution, complete part 3 on page 2 for each student who you're claiming a credit before you do parts 1 and 2. Okay, so if we scroll down page 2, part 3, this is all the information on the student. So we've got John is the taxpayer here, but he's also the student. So we've got John's name as the student, his social security number, the university he's going to, and then answer the questions down here, yes or no, depending upon what the appropriate answer is, right? So he received a 1098T, no, box 7 was not checked. The EIN for the university, he can get that from the 1098T. And they are asking here, did you claim Hope Scholarship Credit or AOC or AOTC for any 4 years before 2021? And remember, that's important because the American Opportunity Tax Credit is capped at 4 years. So if you've already claimed 4 years of credit, you can't claim the AOTC again, right? You can claim the Lifetime Learning Credit, but you can't claim this again. Yes, he is enrolled half-time and he's pursuing a degree. Hasn't completed the first 4 years of post-secondary education. So that's a no. And then in line 26, yes, this is an unfortunate limitation. If you've been convicted of a felony for possession or distribution of controlled substances, you have effectively opted yourself out of this credit opportunity, even though you might be following all the other rules, right? This is just one of the limitations of if you have a criminal record and it's a felony conviction. Now, the American Opportunity Credit down here, lines 27 to 30, and then Lifetime Learning. You notice up here as you answer these questions, a lot of them, if you answer no, you can't get the AOTC, and you're jumped down to the Lifetime Learning. And so that's what they're really effectively doing here, is they're trying to weed out the availability of this AOTC. So the AOTC, we've determined that John does qualify. So line 27, they're asking, what are the qualified education expenses? We pulled this off the 1098T, but as it says, don't enter more than $4,000, right? So even though John had a little over $5,000 of college tuition and other expenses, $4,000 is the limit. And then it asks us to subtract $2,000 and then multiply by 25%. Again, remember what they're doing there is they're saying, okay, you get the minimum $2,000 if your expenses are over that, but then you're only going to get 25% of the excess, capped at $500. And so that's what John's getting here. He's getting the $2,000 plus the cap of $500, so he's going to be eligible for the full $2,500 to start with. Okay. Now, once you've got that completed, then you can go back to page 1 of the 8863. Okay, so we go back to page 1, and then on line 1 we enter the $2,500, right? So they're asking, pull that number from part 3, line 30. Now in lines 2 through 5, what they're trying to do here is compute any phase outs, right? So if your income is what they would say to be too high, you're not going to be eligible for this tax credit. So $180K, married filing joint, $90K if single or head of household. In our case, John earns $32,000 a year, so he falls well below this threshold. So as we compute the rest of these fields, $32,500, that's his income for the year. Subtracted to do out, $10K if single, head of household, or qualifying widower. And so the ratio that we're working with here is 1.0, right? And what that means is that we are not going to be subject to any phase outs. He will be eligible for the full $2,500. If his income was higher, then what we would be doing here is we would see a different ratio down here. We would see, let's say 0.9 or 0.85, and what that would effectively do is it would limit the $2,500 maximum. So he would get a reduced American Opportunity Credit, maybe not $2,500, but it could be $2,200, $2,100, depending on how much higher his income was over these threshold amounts. Now, the American Opportunity Credit is bifurcated into two components, right? There's a refundable portion and a non-refundable portion. When we talk about refundable tax credits, we're talking about tax credits that can be issued to you even if your income tax liability has been brought down to zero. Okay, so refundable credits are always fantastic because it means even if you owe no tax, you can still get a tax credit. The child tax credits work a lot like this. The non-refundable education credit is just that, is just the opposite. It's not going to be refundable if your income tax liability is zero, but you can still take a dollar for dollar offset against your tax liability. So what we've done here is we've computed the refundable portion of the credit is $1,000, and then the non-refundable portion is $1,500. So how do those amounts eventually work their way back up to the return? Well, the first place is on Schedule 3, we have the education credit here flowing from 8863. This is the non-refundable portion. So $1,500 is going to be taken as a credit, dollar for dollar, against John's tax liability. But it can't reduce or push his tax liability into a refund position, right? It's only non-refundable. The second piece for John is the refundable portion. Refundable tax credits are entered here on line 29. You see here we have the American Opportunity Credit 8863, line 8. So up here we have the non-refundable portion, $1,500 reported on line 20 because that's coming from Schedule 3. And then we have the refundable portion, which is an actual tax credit that can be refunded in excess of your tax liability. And that is reported on line 29. So for John's tax return here, right? So we've got his 1040. There we've got his wages, $32,500. He takes a standard deduction. His taxable income is $19,950. And then the total tax computed is $2,198. So the first piece that John is going to take is the non-refundable credits from the American Opportunity Credit. That's the $1,500. So the $1,500 lops off that piece there of $2,098. So his net tax liability is $698. And then he's getting a refund here, or he's getting credit rather, the $4,000. This was from his W-2, his federal income tax withholding. And then he gets the additional $1,000, which is the refundable portion of that American Opportunity tax credit. So all things said and done, John's going to get a nice little refund here. He's going to get, again, he owes $698 in tax. That's his total tax liability for the year. And then the amount of refund he gets is the $4,000 plus the $1 minus the $698. And so he gets $4,302 back as a federal tax refund. Okay, so that covers it for this tutorial on the 8863, specifically the American Opportunity Tax Credit. Again, I haven't covered the Lifetime Learning Credit in more detail, just the Aotc. But I hope that was helpful. If you have any questions, leave me a comment below. And I look forward to seeing you again on the next video. Thank you.